Hi, everyone. This is Anshul. You are watching the June15 Podcast. And today we have a special guest. He is Cal Parker. He is the Director of Revenue Operations at Biz Equity. Biz Equity is one of the leading tools on the market to help with business valuations. Cal has over a decade of experience at leadership positions in forward thinking, cutting edge startups and software companies like Biz Equity. Cal, welcome. Thank you for being on the podcast.
Yeah, thank you, Anshul. I appreciate you having me. Really excited for this.
Absolutely. Let's start with a simple question, right? Let's start with your background. Tell us more about your background and how you got to be the director of revenue operations at Biz Equity.
Yeah, you know what? It's not terribly interesting, but I think I started my career like a lot of young professionals coming out of college. Was actually an intern at Biz Equity for 2 summers when I was still in college. I was at 14 so years ago, and got my boots in the ground, doing prospecting, running marketing campaigns for Biz Equity, which as an intern, I'm sure some people probably think is crazy, but when it's a startup and the sales reps, the few that we had at the time needed assistance, I was that person as the intern. I was kind of the guinea pig going through the trials and tribulations. And at the time, it was probably a lot of actions that would not go over well today. It was a lot of spray and pray email, a lot of email replies back, saying "f you," because it was a lot of spray and pray, which I think a lot of people did then. I was an intern and really, was just getting used to the professional world, but from there, I luckily had a job offer in my senior year of college, which made senior year a lot easier. But our CEO, Michael Carter, provided me with that offer to start as the market development manager, and kind of start the marketing function at Biz Equity. And started that from ground zero to what it is today. And no longer am I on the marketing team, but overall eventually went through the sales side, partnerships with ADP, the likes of the Wall Street Journal, a lot of big names that help Biz Equity kind of get our name out there. And now I'm the director of revenue operations. And I wanted to provide that insight into my background just to say all of that was extremely beneficial for my learning because I was working on the marketing side, I worked on the sales side, worked on the partnership side, all of that entangled with customer success and seeing the success of our users allowed me to kind of see all sides of the company. And I think I knew a lot or I knew a little about a lot, I would say. So kind of being in charge of the revenue operations allowed me to focus on kind of the vision, and seeing where the bottlenecks were, the issues with the company and our speed to getting things done. And I think the efficiency now that we have at Biz Equity is tremendous. Um, I think that's just a quick on my background, and I could dive in more about Biz Equity and what we are and who we help as well.
Yeah, absolutely. I wouldn't say that was a boring background, right? Because you started with sales, or you started with a sales oriented role. And I think that's the best first job you can have because there's no fluff in sales, right? You're thrown in the deep end of the pool. And as you said, right, those emails and those hard conversations, getting over that rejection, yeah, nothing but boring. I wish my first job was sales. So,
Well, I will say, and just to hop in there, it was a great kick in the butt, and luckily I had great leaders, Brent Heflin and John Hallinan, who's no longer at Biz Equity, but had some great leaders that kind of boosted me up and gave me the experience. And we would do cold calls back and forth, and just speaking to your customer, I think provides the best learning experience because you know how to talk to your customer. If you can talk to your customer, you can talk to anybody. I think, right? I think in the beginning stages or young part of your career, getting over that fear is essential because I think it allows you to kind of see vision from all different aspects.
Oh, I completely agree. Like I've been doing a lot of sales activities for my company, and now like I've checked off everything, and now I've come to cold calls that hey, this is something I need to do. So just getting ready, like starting next, like after Labor Day, I'm gonna start cold calling, right? So I've made a list of a
Yeah.
thousand people. So we'll see how that goes. We
Awesome.
for our next episode, I'll have stories too about people, using
Great.
profanities and whatnot.
Yeah.
So let's talk about Biz Equity, right? So this is a software that provides like quick real-time business valuations. Like tell us more about that.
Yeah, and the mission was sought by our CEO and founder, Michael Carter. I think he was in a meeting with private equity guys long, long time ago before the start of Biz Equity, where the idea came to him, and it was a question about, I think, what his business was worth, and that kind of clicked to him, like, why would I not know what my business is worth? And then looking into the statistics and seeing that 98% of privately held businesses have no clue what they're worth, he sought out to democratize that and make it easier, more affordable for business valuation. And ultimately, Biz Equity, we are the online leading valuation platform in the US, right? We do have some access in some countries like India and the UK, but it's a very easy 7-step process, 3, 5 years of assets, income, liabilities, look at the growth and operations of the company, integrations with QuickBooks Online and Zero. It's a really simple platform to use, which is kind of crazy to think about because valuation is so complex. So there's a lot going on behind the scenes. We have an expert who wrote the book about business valuation, Scott Gabehart, who's our chief valuation officer. And we've really just been able to find the right markets. Initially, Biz Equity started, right? I mentioned Mike saying businesses have no clue what they're worth. We still found it wasn't easy to go direct to consumer, direct to those business owners. We say that would be B2C, and at least our business case. And we went more B2B, working with the advisor to the business owner. So whether it's a financial advisor, a CPA, consultant, right? They are the experts, right? They know the financials. They can provide the proper expertise and advice to their clients, and do it at scale. It's not just one valuation. It doesn't just take 2 weeks to go through. They can produce multiple valuations, right, in the snap of a finger, and provide real-time valuable insights immediately. So that's really just to the tip of the iceberg with Biz Equity, without going through a full giant pitch.
So you said something very interesting. You said 98% of businesses don't know what they're worth. Like, why is that worrisome? Like why should me as a business owner, why should I worry about what my business is worth? Tell me more about that. Like why were you so worried when you said like 98% don't know it? So I'm curious.
Yeah, so if we look at the facts, and now the stats have changed a little bit. I think it's around 86% now don't know what they're worth, and we like to think that we're part of the reason that statistic's gone down. But ultimately, when you think business valuation, it's very event driven. Someone's looking to sell, looking to transfer the business, or looking to buy another business. Those are just a few most common scenarios. And ultimately, when someone gets that business valuation done, it's too late, right? It's too late to make any significant changes. Just yesterday, we had one of our customers and one of my great partners, Tim Petrie at HD Growth Partners, out in a firm out in Ohio. And he talked about working with business clients and their valuation 3 to 5 years before a certain event, because that really provides ample time to make decisions and figuring out the expenses and what category they should really go in, and maximizing that value. Because sometimes, just the numbers on the books aren't the best way to maximize the valuation of a business. And people like Tim are the reason that there are more businesses that understand their value. And ultimately, again, we think about the actual, the market. Look at the baby boomers. There's $12 trillion in business value set to transfer over the next, let's say, 5 to 10 years, we've been saying that now for 10 years. The years might change, but it's still the same gambit that we're faced with, and business owners are faced with, and they just don't have the expertise there. And now we really hope with Biz Equity that accounting professionals, CPAs like Tim, are able to provide that actionable insight to their clients.
So you mentioned that you should know your valuation 3 to 5 years before, and that helps you optimize your business. But what kind of changes? One thing you mentioned was like just the cost structure and everything. But what kind of changes do you see businesses make once they know their valuation versus when they don't? Like how does it prepare them to sell better?
Yeah, so there's a stat somewhere, and I forget the exact statistic, but a business owner that actually knows what their valuation is more than 3 years before they look to transfer the value of the business, the valuation increases significantly compared to a business owner that is valued with less than a year. And again, that might be leadership changes for a particular business or cash flow changes. It could be a restaurant, could be a construction business, could be a SaaS company like ours, like Biz Equity. So there's many changes. It really is independent, or it's dependent on the industry. Thinking of the accounting industry, right? We look at firms that have different multiples based on whether they're brick and mortar, whether it's a hybrid, whether it's a boutique firm. And those are kind of things that you can uncover and change in 3 to 5 years, right? If there is an accounting firm that is just strictly brick and mortar, I actually think I got it from a LinkedIn post from you and one of your connections. I think it was like 0.7 to 1.1x
Yep.
revenue, right? And then if you look at boutique firms that might be like Tim over at HD Growth, someone that's more a boutique and is offering really personalized services, looking at up to 2.5 times revenue, right? That's a drastic difference. And that may not be something that's uncovered until you go through the valuation. So again, it's very dependent on the industry, but those are the types of conversations that you want to have with an expert. You don't want to go in blind and say, we make this much money, we have this much cash flow every year, we're great, which may be the case, but is that enough for retirement? Is that enough for your son's education or daughter in college, right? All of those conversations have to be, a part of the thought process for a business owner.
So you also mentioned like baby boomers, right? There's like 12 trillion worth of wealth that needs to be transferred,
Yeah.
and that's a big reason to for people to sell. Are you seeing any other trends like in the M&A world, sort of like why businesses are selling, why they're coming to you?
That's the majority. It is businesses looking to sell or bring on new ownership, or just interest from private equity, right? If there's interested buyers, instead of going into that conversation blind, right? Or hiring a CVA, which firms can do, right? Hiring a certified expert, just going to cost a lot more money, take a lot more time. Whereas with Biz Equity, you can kind of have your own independent research, right? You can work with your advisor and have that information available. But we see succession planning, gift tax planning to someone in the family. For insurance purposes, we have duly licensed advisors that, based on the size of the business, a life insurance policy could be drastically different than if you're just looking at the income of an individual. So that can really, one, help the actual business owner be more protected, but also on the insurance side, right, more opportunity there to work with clients. It's not just valuation, but then it branches off in all these different conversations and considerations. And that's where, I wouldn't say the money's made, but where the services are brought better, that client advisory services that accounting firms are looking for, and all the financial advisors that are trying to offer more. Business valuations, just again, the tip of the iceberg. I think I used that before, but just branches off into so many other scenarios.
You preempted my next question. I was going to ask how CPAs can help their clients, but I think you covered that. Like, not just planning for their exit, insurance policies, general well-being of their clients.
Yeah, and just having that relationship, right? I've used Tim names just because we were on a webinar yesterday, so we had some similar conversations, but he was getting fielded with questions from other professionals in the accounting and bookkeeping community, and there were some accountants that were still, only provide tax and bookkeeping work, and some of them may have been not, I wouldn't say afraid, but hesitant to offer more services. And Tim put it like, I'm like their therapist, right? I ask them, what else can I do for you? Right? How's your business going? And you want to have that deep relationship because that allows you to work with a customer, like the lifetime value from the business side is fantastic, but also just relationship wise, referrals, right? If your clients are happy, if they know somebody else that owns a business that needs some help somewhere, or maybe they're looking to sell one day, it's just great relationship building.
I think the accounting world needs that. Like CPAs are under a lot of pressure to increase their prices. To do that, they need to add more value. So having a tool like this, where they know what their clients worth, like their business is worth, that I see a lot of value. So I agree.
Yeah, and even getting away from timesheets, right? If you a lot, I know there's been a lot of conversations. Jody Padar over, I know she has her own firm and she's a great influencer in the accounting community. I think she has an entire book about pricing strategies for the
Yeah.
modern CPA firm. And something to think about, it's not just hourly based, right? There can be certain scenarios where there's hourly based billing and fee based billing, but today, much like Biz Equity, a subscription company, think of it like packages, right? There may be like a starter package that might be the right fit for some folks, but there might be a middle package that might offer those additional services for an extra fee, and then there's that premium white glove type of
Mhm.
support, right? You're there for everything, and of course they're going to pay more for those services, but they're benefiting a lot more from them as well. And I think that's just something that more accounting firms are more up to speed with today. And I think even when you look at the younger workforce, right, the labor, I think we'll get into some of the labor stuff, but looking at the labor, it's easier for younger professionals that aren't so focused on, hourly based billing and can more focus on the creativity, right? I think that's what we see
Yeah.
more with some of the younger generation, which I might still even fit in, but I think, even younger, those that are just starting, I think it's important.
Oh, I completely agree. And I think that'll be a different podcast. Like, because if we end up
Yeah.
talking about what the younger generation wants to do and what accounting firms are not providing them, that's it's going to be like a 2 hour episode. So,
Yeah. I'm sure there'd be a lot of comments on that too.
oh, that'll actually be a good one from an engagement standpoint.
Yeah.
So let's talk about like labor and global teams, right? Based on your experience, right, having a global team, how does that impact valuations of a company? Um,
Yeah. So I guess having a global team, one, you can work with more customers, I think, across the region, but also just internally. Let's say there was a firm that outsourced, someone that worked for them, let's say in India or the UK or wherever they may be, right? That's another employee that can handle different conversations and different work. What's so unique about Biz Equity is it is user based, but there's something that's a smart link feature. And if there needed to be an update to a business valuation or update to their QuickBooks account, there's a smart link that can just be sent securely, can be set for 2 days or 7 days or a specific period of time, could be expired. And I think the labor force, not just having someone next to you in office or virtually, in the US, but offshore, someone that might manage the valuations or be able to do some of the work that someone maybe in-house wouldn't be able to do, I think is really beneficial. And I think we're just kind of getting started with seeing that. So I wouldn't say I'm an expert. I have some thoughts about it, but I think that's what, my original thought.
so one of my podcast guests, she's a lawyer, and she said something very interesting. So, see, you're in the M&A world, you may relate to it. She was like, I tell my clients who are looking to buy an accounting firm. So that's what I do, right? So I
Yeah.
work with accountants. So she said that find a firm that doesn't have an offshore team, buy it, and then build an offshore team, because that's how you get value, right? You are not just taking their book of business, but now you that's a real value driven that's a real value driver. You access talent, and then you get to save money, which increases your profit margins, which is what a lot of buyers are looking to do. So I don't know if your experience, like, if you
Yeah,
see.
sir. I can add to that. And actually, similarly to when we talked about accounting firms, their multiples being more valuable depending on the type of firm they are. I think having that offshore team is going to increase the value. That's a small factor that could increase a few percentage points, right, on the valuation. Where and every penny does matter, but it's something similar. We saw a study a few years ago, accounting firms, and I think this probably fits in with those boutique, but accounting firms that even had types of software that they use that was outside of the accounting world, their multiples were much higher than those accounting firms that kind of did stuff in house, and maybe their only technology was QuickBooks or Zero or any sort of accounting platform or billing software. So I think it's just an ever changing landscape, right? It's a similar methodology that can be spread to different scenarios, and it's just increasing that valuation and making it easier for an accounting firm to have labor. And again, like you said, it could be less expensive. Someone that might be more dedicated too, working different hours. I think those are all things that all accounting firms, and not just the accounting community, but other communities could also take advantage of.
Absolutely. So when we think of valuations, right? Let's say an accounting firm, they have an offshore team. They're looking to sell. It definitely helps a bit with valuations. But there's two ways to offshore, right? First, you could work with a third party or an outsourcing company, or the second is you can have your own team, like your direct hire employees. Like,
Mhm.
do you feel like having direct hire employees or direct ownership teams, does that is that a better proposition when you're looking at increasing valuation?
I think so. I'm not sure I'd be able to give the best advice there, just being fully transparent, but I would think so. It would make sense to me. Have to see the numbers and what kind of data there is on it, but it would make sense.
So, on our last call, we talked a bit about stigma and fears. So, when you think of like offshoring, that when you hear that, all right, this company has, an offshore team, like what are some of the fears that pop up in your mind? And this is a safe space,
Yeah,
so
yeah. No, I think that's a great question and something that some people would have to be honest with. And I think when you think of the cold calling, for instance, you could get a spam call, and sometimes I think it's from an offshore team. So I think some of the misconceptions of having an offshore talent team comes from different actions, right? It's not right. There's great workers out there, but just like in the US, right, there's bad seeds everywhere. And I think just sometimes people get that mindset that someone might be scamming or something like that. And I think that's a thought that some people have because it is prevalent, right? There have been those types of offshore scams that are often hard to track, and I think that's part of where it falls into to place. But that's again where people are uneducated and don't understand the ability to find real offshore talent, right? That is a real benefit to the team and can be a rock star, right? That's so often misconstrued, like many things, right? You can use that in the U.S., in Canada, anywhere, but I think that would just be something that others might be, scared of.
I agree. I think what I also hear is there's when I talk to accounting firm owners and I'm like, hey, do you want to set up an offshore team? And one of the first things that they talk about obviously is like, sure, like what's the security, but they're talking about security of data. They're talking about, well, my perception is, isn't that going to be low quality work, like low
Yep.
cost, low quality? So that is something that comes up a lot. And obviously, like you're scared, like scared of getting scammed, you're scared of just the unknown because
Yeah.
you don't know what could happen. You don't know if something bad happens, how you'll fix it. I think that's one of the things that people worry about a lot.
And that brings up a great segue to the similar conversation. That's how people felt when firms started going remote, right? People thought
Absolutely.
when there were remote workers that someone wouldn't be working, right? I think we've all probably seen those videos of someone that might work for like a big four consulting firm. They'd have all the snacks in the room and all these drinks and stuff, but like people that worked in the office I felt like sometimes weren't getting as much done as a remote worker. But that's just a similar misconception where it might be low quality work, right? I think some of at Biz Equity, we have a team that's in office right now. We come in, 2 days a week, but we have employees over in Europe. We have engineers that are in Arizona. We have employees all over the country that do a phenomenal job, right? It's not someone that can't be trusted, and I think it's a similar mindset where we have to shift and really see, wait, this isn't just low quality work. This is really high quality, brings value to the firm. So I think that's something everybody could look at.
I really like that analogy of comparing it to remote work because, yeah, when I think back, people were like, this is like the world's going to end because we can't get stuff done remotely. And it wasn't like we were given notice, right? It just happened
It
overnight.
had to happen.
And people did well. I know a lot of people, a lot of companies still prefer in office work, but they at least now know that good work can be done remotely. And that's also funny because I was talking to somebody and they said that the biggest challenge I would have convincing accountants to, set up teams in India, Argentina, wherever, is not the stigma part of it. It's getting them on board with the remote working part
Yeah.
of it.
Yeah.
So I thought that was very interesting.
Yeah, that is
So
interesting because, and sorry to cut you off there. And one of the harder things to do is train someone remote. And I think even we see that, especially with younger employees. Like if I was starting my first job and I was remote, I think that would be one of the more difficult things to do. And training, I think, for someone that's starting is difficult. I still think that's something that I'm sure other companies are faced with. I think if it's talent that has already been in the workforce and has experience, and I would hope that the offshore team, right, would have experience and be, experts with what they're doing. I think it's much easier. I think if it's someone that's just starting their career, that's where it's more difficult. Um, but
that's a very good point. Training remotely and building relationships remotely. I think those are the two things we still have a lot of improvement,
Yep.
like a lot of room to improve. Because yeah, I remember my first job. I mean, if I think back, if it was done remotely, I think I would not have gotten the training I did. But having said that, I think we as employers just need to change a bit. We need to adapt
Yep.
our training. We need to adapt how we can build relationships. Because I did end up working for a firm before I started my own thing where it was remote, but like they had this amazing thing where they would have like weekly dates, like just Zoom or like whatever Google Meet dates, where you talk to one other person of the team member of the team, one other member of the team, and it was like a random person, and it was just like a half an hour call where you got to know each other. So
Oh, I
I
like
thought
that.
those things really helped because, and you're not allowed to talk about work, so that was the thing, right? So
I like that. Yeah.
you're not talking about your family, your dogs, or you
Yeah.
know uh, anything. So two more questions. One is a lot of these fears that are associated with building an offshore team. Do you think that having a direct ownership team, direct ownership employees, do you think if you have that versus working with a third party, do you think that helps address some of these fears?
I think so. I think having that direct ownership team that can, work directly with rather than working with like an offshore agency, I always think that is better. I myself would feel more comfortable doing that because I just feel like you can trust more. you have that conversation with each other, right? You form that relationship with somebody. So I think I think I would prefer to work direct. Again, I maybe I'm wrong. Maybe there are other ways to do it, but that's how I think I would prefer. Yeah, I'm not sure
Makes
what you.
sense.
Yeah.
No, I completely agree. Like, so what I've heard from, I mean, I am obviously biased because that's what I do, but like what I've heard from accountants, I can talk more about accountants. It's really three things, right? When they are working with their employee versus like a vendor, I feel first thing is they like that they don't have to share their data with another company, right? The data stays within the firm. And that's a big, that just gives them a lot of peace of mind because it gives their clients peace of mind. The second, as you mentioned, like building a relationship, they're able to build relationship, they're able to build their culture, they control the training and everything. So they start getting the same quality work from their offshore employee as they do from their US employee. And third is like once they figure out, right, the first 2 years, like there's a lot of kinks to work out. But once they do that, right, then they start seeing it as a long term solution that, okay, now I don't have to worry about not being able to find talent. So, and obviously, like there's other ways as well. There's challenges, nothing's easy. But that's sort of how that's the feedback I have gotten from a lot of accounting firm owners.
Yeah, and I think that all makes sense. And even we used to work with like a marketing consultant group, and the data side was always a big piece, right? We have so much, secure data, we can't let others see it. So that was always a big part. So I think that's right. And having working with a direct team, that might, right, you can figure out the data security much more easier than I think working through, two parties to get it there. I think is much better.
Absolutely. I want to go back to Biz Equity. You had mentioned on our call that your valuation tool is almost sort of like automatic, right? You have integrations with like QuickBooks, and it's sort of continuous, right? It's not like I have to wait till the end of the month or like it's. I mean, I can see my valuation pretty much in real time. So I want to talk more about that. Tell me, how do you make that happen?
Yeah, so I mean, we have some of the best engineers. We even had some former engineers that were just phenomenal, right? That built the core product of Biz Equity, and then the genius behind it, right? Of course, Mike, our CEO. But that's one of the big, or especially was one of the big selling points in the beginning. Is this is not a one-time valuation. This updates in real time, based on real market comps, from real data, from real industries, real companies, right? You can use all the buzzwords, but it's coming from reliable sources, right? The BizComps of the world, the RMAs of the world. So we're getting the most accurate, up-to-date data as possible, and in real time, right? Based on the financials. Let's say the financials are the same financials that have been in the system for, let's say, 3 months. But let's say the one company, right? They didn't need to see the valuation in those 3 months. Next time the CPA or advisor, or whoever logs in and goes to refresh the report or generate a new report, even when they're gone and with no edits, you'll see those. I'll go this way. The little, like, it almost looks like a stock chart, right? You'll see the small changes inside the report, and you don't need to do any updates. That's just all in the Biz Equity engine. So I think that's one of the really unique things because it's living and breathing. And that's part of again, it's not a set it, forget it, one-time valuation. We need it, right? Of course, it can be used for rare circumstances that someone needs a valuation ASAP for, unfortunately, probably didn't prepare well enough for a scenario. But working with the business owner for 3, 5 years, 10 years, right? Some of our power users, like, they have some crazy looking graphs that maybe dipped at a certain time, like say during COVID. These valuations have been running in our system for years, but it's awesome to see that trajectory and get to that kind of valuation that a business owner dreams of, right, for their retirement. So it's really unique where it's all living, breathing.
I really like it. Like this is the one. This feature fascinated me the most. That it's live. It's
Mhm.
So. Last question for you: is there anything you want to talk about Biz Equity? Anything else you'd like to mention that I didn't ask you?
I don't think so. The only thing that I would mention is it's super easy to use. You don't need to be certified to use it. That's often a question. And we get it, right? We work with financial professionals that have to follow certain guidelines and certain standards, but our valuation is meant to be used as obviously a discussion point and relationship building. It's as accurate as any solution out there. We've been tested by every company, every accounting firm you could think of for accuracy and fall within, 2, 3 percentage points of someone that does it, for 3 weeks for one valuation. So it's really unique where we have the privacy set in place. So you're not liable if there was incorrect information, because let's say a business owner, for whatever reason, they falsified information. It was
Mhm.
entered into the system, right? Our users are safe from something like that. But we make sure that everyone's protected. So I think those are just a few things that I'd like to mention. Um, Super easy to use, again, integrations, but that's about it.
Well,
But yeah,
thank
check
you.
us out at bizequity.com. I guess I'll say, I'll plug Biz Equity for a second.
Oh, absolutely. To my audience, like if you are a CPA, if you are a broker, or if you're a business owner looking to sell, or thinking about selling in the near future, or in after 5 or 6 years too, check
Yeah,
out Biz Equity. Like they have a really great, easy to use tool. It is affordable, and they are number one at what they do. So check it out. Any questions? You can reach out to Cal. And Cal, thank you so much for being on the podcast. Like we loved
yeah.
having you. You shared some amazing insights. So thank you so much.
Thank you, Anshul. I really appreciate it.